So inventory is down, interest rates are forecasted to stay low throughout 2021, and demand from buyers is high. Maybe you heard the message last week, but what about this conversation about impending foreclosures hitting the market? Hey friends, it's Andy Nazaroff with the Nazaroff team. This week's Real Estate Corner, I want to talk to you about a little, maybe interesting, maybe not so known fact about the number of foreclosures that may be coming to the market in 2021. You see, back when our COVID state started and shelter in place started, and there was a bill that was put forward really quickly to protect homeowners that were affected because of circumstances around COVID using a tool called forbearance. Now, forbearance is not necessarily forgiveness, but forbearance is the ability for the lender to give the borrower, the homeowner, permission to miss a few payments for a time certain. And in this particular case, it was anywhere between 3 and 4 months. And then at the end of that period, those payments didn't go away. They were still due. They were still required to be paid. And in some cases, I think you've seen that those forbearance rules have been extended. It's up to the individual bank to participate in that. In some cases, they didn't do it at all. But I've been checking up and reading up on what is the state of these potential foreclosures that might be coming out as a result of forbearance. Here's one really interesting fact. 39% of all of those that went into forbearance, and there's about 3 million homeowners nationwide that are in this forbearance state, and 39% of those, which I know that might sound like a lot more than 1 million people nationwide, but when you take it as a national sample and bring it back down to your local area, it's not as much as you think. So of the forbearance, people that are in forbearance, 39% of them are more than 5 months behind on their mortgage payment, which when they're out of forbearance, they have to pay back. So here's the question. Are we going to have all kinds of foreclosures as a result of that group having a large payment that is due? Now, some banks are saying we'll allow you to put what is owed on the back end of the loan. Okay, but most are not. But you have to ask yourself, if 5 months of payment are due, what is that homeowner's ability to, make amends with the lender? Do they just have the extra cash sitting around? Probably not. Do they have it in some form of relief money from the federal government? Probably not. So how do you end up with the foreclosure? Well, I want you to hear this. I don't think any of this is going to result in a problem in the real estate market. I actually think it's going to end up as a benefit. And let me explain why. If somebody is going to go into foreclosure, two things have to be true. One, they have to have some sort of an economic situation that caused them to be behind. It caused them to miss several payments. And then two, and this is the big one, they have to actually have a situation where they don't have equity to sell it themselves. It is very rare for a homeowner to let their home go into foreclosure with their bank and they have equity. And with the run up of the market, I mean, just in the last 12 months, prices in many areas went up by 15% year over year. So with that run up of the market, home equity position increases, it's typically more than enough to cover the amount of forbearance. So that homeowner has some options. Maybe they can negotiate a home equity line of credit if their credit hasn't been damaged too much. Maybe they can negotiate a refinance with the lender and finance that all through, so it's packed into the new loan amount. And or maybe they just say, you know what? This house is a little bit too expensive for us to keep maintaining. Let's sell it and use the position that we have in our equity, keep that equity and find something smaller. So if the forbearance situation does lead to foreclosures, and I'm completely wrong, which I might be, but if it does, the next question is, what will that do to real estate prices? And I'm here to tell you that in 1 year, my Central California market and many markets across our country, inventory dropped here by over 54%. That's a significant decrease. I'm talking about 6, 7, 800 homes fewer on the market than there was a year ago in the cities of Fresno and Clovis. So if we had some foreclosures hit the market, they would easily be absorbed by the amount of buyer demand that exists. Add to that how low interest rates are. It's going to be super easy to get some even more demand to the market when inventory might increase. Long and the short of it, forbearance might lead to foreclosures. It more than likely will lead to increased sales that look like, to you and I, traditional sales, because they won't have to mark that it's foreclosure. They won't have to mark that it's a short sale or even a distress sale. They'll just be paying off some back fees and payments that are due. Hope that helps. Look forward to connecting with you soon. By the way, if you haven't yet, subscribe to our channel or follow this page on Facebook. See you next week.